Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for the 30th of June 2014. So the month closes out and it went out with a whimper. Okay, so we got pretty much what we were looking for today, and what we were looking for was balance after the first hour. And in balance, what you primarily end up having is highs get sold, right? And new lows or potential new lows get bought. And there was really only two really clean entries, and both of them happened at extremes today. This high could have been sold, but it was the first hour high. I was at least hoping for a stretch up into this zone. This was the first place that I said I would look for a move back to the downside. We fell about a point and a tick, 5 ticks shy of getting into this zone for a short side trade. And then you can see we set a new low here with about 20 minutes left in the day, and we got responsive buyers. Again, very indicative of a balanced day. Really very slow. The best call in the morning, we opened up just below Friday's high, and I said primarily that I would not be taking gap fill for a short. I wouldn't be taking Globex high for a short or Friday's high for a short because there's not sufficient rotation there. The market simply looked like it wanted to trade higher, and at the end of the day, that was exactly the right call. All that would have done was would have garnered a stop, right before we rolled back to the downside. So in my book, right, avoiding a losing trade is just as valuable as getting a winning trade. So complete balance. There's not a lot of rotation. Now I do want to address something that's actually bugging the hell out of me, and I think it causes other traders issues, right? So what we want to do as traders is jump from market to market to try to find a trade that works, right? And it's very, very difficult for most traders, especially traders that need to make money, to stand up and walk away from the deal, right? When they are looking to or need to make money. If there's ever a week where I anticipate it being slow and grindy, if you go back and look back at the past July 4th weeks, they have been slow. They have been relatively grindy affairs. I don't expect the market to go anywhere in particular over the course of the week. Almost everyone from an institutional standpoint has already taken off for the week. They take the entire week off. If I wasn't doing coaching, I would have already taken the week off. There's just nothing going on. And as a matter of fact, the longer you sit there and stare at the thing, the more likely you are to find a trade to dig your elbows into. So along that lines, if we go over there and look at NQ really quick, what we will see is that NQ gave us much the same thing, right? Normally, I would say this move into prior day's high would be an area I would look to take a scalp. I suspended that this morning, and again, that benefited me tremendously. The one trade that did set up, and it set up 2 times today, but the second time it actually triggered in, and that would have been the first hour high, which was right here. Now, you can see there's 2 different classes of trap trades. There's trap trades that close, such as this one, right? Below here, the best trap trades, let me reset that. The best trap trades are the ones that close above and then below. So we had a couple traps. This was a B grade trap. This was an A grade trap, and this was an A grade trap. Now, what was very interesting was that this came fairly late in the afternoon, 1:45 in the afternoon, and what I would have expected, or what I was thinking, was that we would keep driving up, and we've known that buyers have had control towards the end of the day, and they've been able to drive the market higher. So what I found very interesting was the fact that we closed below the first hour high. On days where we're super strong, we tend to never penetrate back below that first hour high, and so I did, right in this area, call for a short, and I actually took it in 2 places. I took it at 38.43, and then I took it again at 38.46. And I actually did this in real time in my trading room. I have it recorded if anyone actually wants to see whether I really took the trade or not. I recorded it, and then obviously we had this roll down from 38.46 right down to 38.40. So I was able to garner, 3 from my original entry, 6 from my second entry, which is what was the preferred entry that I would have had, that I wanted to take to begin with, right? So what was I going to say? the thing about the slow market, but even with that trade working properly, right? Someone actually asked me and pointed out on Twitter, I found that very interesting. When I pointed out the trap trade, they said, really, are you, and the response was, are you kidding me? Well, let's talk about that for a second. Let's talk about someone who thought the market was going to go higher and they took the long at 38.46, right? So if they'd taken the long at 38.46, think about this for a second. So maybe they sustained the fallback to 38.42 and saw it come back to 38.46. But if they really thought it was going to close at the high of the day, it's unlikely they dumped. But I talked to a lot of traders, and almost every trader I know, particularly on NQ, they want to use 2, they want to use 3-point stops. They don't want to use 10-point stops, right? So if you think about my entries, right, and what the possibilities were in this area, this short was actually the correct call. Why? We rotated from 38.46 all the way down to 38.39. That was a 7-point rotation. That's $140 a contract. That's a good trade, folks. Okay, if you had to wait all day and that was the only trade you got, that was actually a pretty decent trade considering we didn't get run over in the morning in ES. We didn't get run over in the morning in NQ. I actually took this trap, and when it failed to produce any more of a rollover, some of my coaching clients actually covered this. One client in particular, great job, Bill, took that trade and put the money in his pocket. But if you had to wait till the end of the day, right, this 145 area to take this trade or wait for this setup, this was the next best choice you had. Think about the long scenario. While ES trapped in this area, NQ never trapped it, never even got back to retest the backside of Friday's high here. And so in order to have maintained this long, right, let's say even on a pullback you took 38.46, you would have been able to withstand, 7 points, right? 7 points down in order to hold on. And then even with that, you were able to garner 2 points. So your risk reward completely sucked. And the risk that you took was that actually we were going to break below prior day's high and they were going to gush you down. What I want to get to in all this is 2 things. First of all, the market will resume wide ranges again. If you go back and look at every summer during this period, it gets historically tight. It gets frustrating to trade, right? And generally the guys who tend to make money are the ones who don't wait for rotations lower, and they're able to capitalize off of these smaller rotations and they get more aggressive. But look, the point of trading, and I'll stress this over and over and over again, is not to be profitable today, tomorrow, this week, or even this month. It's to get through the entire year, right? Be able to pay capital gains tax because you've made a nice profit. And then here's the big trick. You got to get through to the following year and still stay consistent enough to pay capital gains taxes again. If you look at Dr. Steenbarger's research, he'll point out that the boom bust cycles not only go from many smaller traders day to day or week to week, but months over months, where you'll have 2 or 3 months of boom and then 2 or 3 months of bust, right? Or you'll even go year over year. You'll have 1 year of huge gains, 2 years of huge gains, right? And then the market will switch on you and it'll push down, and all of a sudden you end up in a 3-year boom bust cycle. That is devastating, folks. Unless you keep a tight lid on your stops, you're able to be, in difficult markets, you have the ability to reduce your trading size. In good markets, you have the ability to become aggressive, okay? Then you are always in danger of being in a boom bust cycle. What prevents being in a boom bust cycle? A couple of things. First of all, knowing that you actually have an edge, right? Secondly, you have a written trade plan to manipulate that edge and take advantage of it. My most basic trade plan, the trade that I run the most volume on, are my ES zones. Right now, I'm not getting rotations down into those zones or even up into those zones to take advantage of that trade. So I'm having to be a little more cautious, right? And even on the trades when they are successful, because I run fewer contracts in NQ, right? My P&L, my reward, is significantly lower than what it would be normally on ES. On top of that, because the ranges are compacted, right? Whereas in April, I was regularly hitting 15 to 20 points on my NQ trades. I'm getting lucky to hit 5 and 6 points, 7 points, right? Last week I had a trade for 24 points. It was phenomenal. It was like manna from heaven. Okay, so if you're a trader that's accelerating in these little small tiny rotations and all of a sudden the volatility explodes, right, and gets big and it wipes out all your gains in a week or two, you've gained nothing. So what I want to come back to is a couple of things. First of all, have a trade plan. Make sure that it's written, right? Number two, verify that you're actually trading that trade plan. There should be a checklist process prior to entering a trade and post entering a trade, right? Number three, appreciate that the ranges are extremely small and they're going to expand. Be ready for what you're going to do when that range expands. Understand the dynamics that are at work. And if you're making money on slow, plodding markets, right, and you have no plan, or you have a poor track record in high volatility markets, right, you still have a problem. And you're going to have to know, importantly, when to stop trading if that's the case. You have to know, hey, I need to stop. The volatility has increased. But most traders are incapable or have no idea that they even need to do that, right? Then the last piece is journal about what's bothering you. So I'm going to go through it, kind of a brief checklist to see if this helps some people out. What's bothering me about the market right now? Well, there's a couple of things. Number one, the market's been plotting and offering almost no decent counter rotations, right? I'm really having to fight to find my trade placement. Number two, I'm not getting rotations on these zones. My bread and butter, I'm not. The zones work. We're just getting no volatility. We're getting no range intraday to hit those trades, right? Number three, even in the morning, which is normally the point where we have the most volatility, quite often that first 5-minute bar is proven to be the low of the day, and we're just simply driving up from there. And what has served me so well over the past years, right, over the past 2 or 3 weeks, has completely hobbled my ability to get into trades. I've been wanting to be long. I'm actually technically, I see nothing bearish about the market other than we're a little extended, right? But any rotation down, I expect to get bought. The problem is I can't get a rotation down, right? And then the last piece that's bothering me is on the one day I did get the rotation down, I kind of fudged my execution up, and when I saw the trap trade from first hour low, which has been extremely high odds, I took my profits too quickly on that trade. Why? Because I'd gotten stopped on that first move down on random news. Okay, so those are all pieces that go into, once I at least get that out on paper and I can say, hey, for the balance of this week, it's going to be difficult for me to, if the range stays this narrow, right, to have a phenomenal week, and I'm going to limp through another week and hopefully either be slightly profitable or a little profitable, but it's not going to be a huge week because I can't get my biggest size on. My biggest size comes in ES, right? The other thing that's bothering me that I am cognizant of, and people don't talk about this, they always want to talk about trade setups, structure, and they don't want to talk about emotion. So on, let's see, Thursday, so my father passed on July 5th. So that'll be Saturday. July 4th is on Friday. I already know that that's occupying some of my mental ability, my emotional ability to read the market well, to stay calm and stay balanced. So generally, no one wants to air their dirty laundry, but I do want to set an example, right, for other traders on how to handle myself, how to handle yourself well when things get difficult. So I know that I'm somewhat, at least in a diminished capacity for my emotional, the emotional wavelength that I would normally have, or the emotional capacity that I would normally have to trade. Okay, so whatever's bothering you, right? First of all, journal about it. Dig down, find what the fear is behind what's going on with you. Number 2 point, and it's very, very important, right? By simply acknowledging it, don't forget to say it out loud, right? This is what's bothering me. Dr. Menaker constantly uses this rule called RULE. Recognize, understand, label, and express. So I know that these things are on my mind, and by sitting down in the morning and in the evening, doing my homework, going over my journal, seeing where I'm executing well and where I'm not executing well. A good example of that was I kind of got blown through on my gold trade today to the upside, and I got blown out on my CL trade. So I ran 4 CL trades. 2 were profitable, 2 were losers. 2 got stopped back to back. And what was most frustrating about that CL trade, right, was that it actually got blown out, blew through all the stops. I didn't really take any pain there, but then it looked like we had fallen out of balance. Well, then we came back up and we trapped, and we moved all the way up to the other side of the range in the afternoon. Well, that was exactly the trade I was looking for. So that would have been a perfect excuse to get really pissed and start taking some crappy trades. Instead, I sat very, very patiently. I actually happened to be in another trader's room that I talked with from time to time when I was in his room, and I called out, hey, I'm shorting CL at exactly this point. I believe it was 105.76, and I was able to take my scales, I believe, at 10 and 15 points and close the trade out, right? 10 and 15 ticks and close the trade out. I executed it perfectly. Okay, so that trade covered an earlier loss, most of an earlier loss, right? And I ended up slightly down on the day still, but I didn't go on tilt. I didn't force my hand in that particular situation. Why? Because I'd already gone through in my journal and acknowledged, hey, this is frustrating as hell to call the direction right, have good location, have the location get busted, and then have them turn around without me being in it because I've already been stopped, right? And then watch them reverse it, and they reversed it for a full 100-tick move on CL. And from where I originally had entered the trade, that would have been a 50 or 60-tick trade for me, right? That's very frustrating. So anyways, I'm not trying to bore people, but I think it's very important as my role as a coach to bring up and highlight the role that frustration can play in overtrading and ignoring your stops and getting agitated, right? And then most importantly, taking what amounts to a small down day, right? And I normally don't even talk about the CL and the NQ, CL and GC trades that I take, right? What amounted to a small down day, right? And trying to come back the next day and revenge trade. Also, it's important because we tend to focus on what we do wrong, also focus on what we did right. What did I do right in the morning? I waved off any shorts that I was taking early in the AM, and that prevented stops for most of my coaching clients and for the people that were in the trading room in the morning. Highly, highly valuable. So I hope this stuff helps. I'm gonna shut it down. It's already late. I'm actually gonna go to a late night movie tonight and see if I can't relax a bit. But in general, right? Be nice to yourself. That's the key to this. Acknowledge where your weaknesses are. Acknowledge when it's a harder market for you to trade, right? The guys who are racking it up in this market are buy and hold guys. That's all there is to it. It's a nice market for them, right? Don't be pissed at them. Be happy for them. They're making money. But also realize if that's not who you are, if you're a day trader, the day trading opportunities are a little bit thinner. And also, as we get closer and closer to July 4th, right, the rookies are going to be running the trading desks. Don't be surprised if you get some kind of wacky moves in between there. Things are just going to have some unexplained, unpredictable moves. And if you don't want that to hit you, right, there's nothing wrong with saying, hey, I'm just going to wait till next week to trade when everyone's back at the trading desk. Anyways, my name is Simon. I'm with Trade and Perform Coaching. I really, really hope this helps some folks out there. If you'd like to have a trial in the room, email me at tradeandperform@gmail.com, and I'll be more than happy to set you up with a 7-day trial. Anyway, we'll talk soon. Everyone have a great night, and we'll see you tomorrow bright and early.